afternoon, everyone. This is Chrissy from Solstice ATR. Hope everybody's doing great. I will be covering some stuff this week, special overall market reviews from last year to the coming year and what the outcome will be. I usually use this for illustration use only. We're not a broker-dealer. Past performance doesn't indicate future results. You can find us on the website or on Twitter by this handle or on Discord by this handle. So first of all, before we begin, what I'd like to say is the market posed for a push higher or a failure. There's a couple of things we have to consider in this video, and what I'm going to cover is the time frame risk because of a lot of the United States, the European market after the COVID-19 have been printing a lot of money. Part of it is trading psychology, not to be biased to one side. I hear that a lot in my group from traders, the whole thing is going to hell due to the lockup and stuff. But I want you to understand, trade what's given to you, not what you think. So your goal as a trader to look at the long time frame. I only got the yearly, monthly, weekly. You can go back to the weekly, 3-year, 5-year, as well as the monthly, 10, 15, 20 years, and so on. When you make money, don't be greedy. Protect the capital that you make. When you have fear and you need to get out of a position, don't let a winning trade or a loss control you. So get the emotions out of it and cut your losses very sharp. Don't stay in them for a long period of time because they can hurt you. The smaller the loss, the better it is, so you can win, so you don't end up losing your capital. And don't have a trading opinion or prediction regarding where the stock's supposed to head, or a future, or an option, commodity, or currency, or crypto, whatever you're trading. So you notice that in GME when the Apex lifted up, as well as AMC, BlackBerry, because of people watching Twitter, and there's a gang of them, trying to pile on the long side or the short side, you end up getting caught because you'll be holding the back. So as a trader, whether you swing trade or day trade, you're in it to make money, not lose money. So I will be covering some of these indexes, some of the futures, some of the ETFs, and some of the equities. So if you like to be part of our group for 1 week for free, ask us how you can join Discord. Okay. I will be going over these scenarios a little bit later, but first of all, I want to go over 2 instruments that most people look at. One of them is the Dow Jones Industrial Average, as well as the S&P 500. I went back, I can go back all the way to 1930, 1926, and so on. But I'm looking from 1982 through 84, when the market started to get the recovery and started to push. That's when the stimulus package from the Federal Reserve Board started pumping more money into the system. Then in 1987, the 97, 2000, 2001, 2008, 2009 crisis, and now in 2021 due to the pandemic. So I want to just go in by zooming into this area till 1990, 596, and show you that the consistency of a move after a bearish or bullish scenario, things do end up taking the staircase up, and we take the elevator shaft down. What I mean by, if you can see, that whole move up, it's taken out by just basically less than a couple of months or a year, and eventually we continue grinding higher, or we go side market throughout the years until they resolve their way out of the being, side to continuation to the upside. Then I can show you in 1997 through 2001, 2003, you can see that push up. Then we had a little glitch in 1999, 1998, 1999. Then we continued higher. Then we had the tech bubble 2000, 2001, and the Twin Tower in September. Then we failed. Then we continued down till 2003. In 2003, we recovered, and we continued back up on a push higher till 2008. and we reset on this scenario where from 2003 till we pushed out till 2007, 2008, then we fell back in 2009. This was basically range bound until we cleared the 2011, 12, 13, then we continued higher. And this is the same scenario that happened in 2011 all the way, till 2018, 2017. This is the election and the British exit. We went side action for a year or so. This was the President Trump in November. Then we continued higher. We had this glitch down in February of 2020 because of the COVID-19. This was the tariff between us and China. Then eventually we continued higher after that big stimulus package came back down. And last week's candle basically engulfed the prior week, scenario of being bearish sentiment. Remember, we're going to trade what we see, not what we think, because it's like similar to this candle. We went down and pushed back up. This was from London, and then, the COVID-19 lockup and all that scenario. We dumped very fast, and the VIX spiked up. Then we continued higher. We had this, January little gap up, and we finalized the two indexes to continue higher on a grind, taking the staircase up. Do we continue to go higher or not? This is open to what the stimulus is, what the vaccinations are, and how the economy going to recover over the years. So if I add to the Dow Jones Industrial Average and the S&P, the Nasdaq, because the Nasdaq doesn't go back, from the 1990s, 1980s. It doesn't go further out. So if I put the NDX there, NDX added to there, we won't have as much, history as the S&P does. And you can see how far it goes till 1987. Then we pushed up. Then the 2000 crisis, we held till 2003. We rallied back up, and we basically took all this gain. It took us about from 2000 till 2013 till we clear that area. Then we continue higher. So remember, it can be a side market. You can still make money, but you don't want to be biased. Or do we continue higher? This is what I'm trying to show you as an overall from the 2008, 2009. As you can see, we had a nice push up and continuation. We had the pandemic, then we continued higher. And if I go in here and I'll add the small cap, which is the anything that's under, let's say, $5, $20, $30 and lower stocks. This will give us an idea what's going on in the overall market in relationship RUT plus $DJI. So here we go. Now we got the full combination, and I use this a lot. And if I zoom in, in the last 3 years and look up at the overall market, we've done very well. After the 2018, 2019, we had a side market. Then we pushed up in 2020. Then we fell back down, and we recovered 100% of the move and continued higher. Are we at an extreme? Yeah, we reached a peak, but can we go further up to the 23? Or the 38 or 50%? Yes, but can we fail and come back, to the 23, 38% and the 50 simple moving average? It is possible. So we're going to trade what we see, not what we think, okay? That's why I put this, and I'm going to go last but not least, use the VIX, which is the fear gauge that most people don't use. VIX, because historically we cannot go further out than what we have here. And we can see the peaks and valleys in the scenario here since the 1987. That's when they started using the VIX, which is, a measurement of fear and greed. And if there's panic in the market, if there's more bullish and bearish scenarios, every time we had a spike up, we eventually recovered quickly. We had the 1990s, then 1998, 2000, 2001, 2003. You can see those spikes were less significant than the last two from 2009. And I can go to the 2009 and up after the recovery. The fear gauge, spiked up a couple of times and fell back in. Are we gonna fall back in this area or not? This is something to consider. This is the most important thing I have on the VIX. The VX is a little bit different. It's about $40. If we clear the 45 area, there may be something wrong with the stimulus package and the vaccinations and all that, and we go through recession or other stuff happening in the market. As you can see from July, the fear gauge has fallen down. Every time it spikes up, it comes back in. Does this mean we're going to fill this gap and stay in this area, or do we go back above that 40? And this is the reason why I wanted to show the VIX first before I go into other instruments such as the Russell. Now we're going to go to RTY. I got disturbed, so that should be okay. Call them back later, they will know. Here on the weekly chart, you can see that the small cap has recovered quite a bit. And last week, it basically had an engulfing candle taken last week's. All that down move basically or was overshot and reversed and continued higher. So if I go on a daily chart, I will show you how it looks like. And we can see on the daily, this is the annual high and low of the year. But if I zoom in here, I have the January 1st till January 28th, because you know the 31st, was the holidays. Then we continued higher in I'm sorry, in December. Then we continued higher in January. We fell back in. And in February, we continued back up. All this last week's, loss was recovered in 1 week back up in the small cap. Does that mean the weekly fib from high to low? Do we hold the 38.2 fib to continue higher, or do we fail? This is a very important area, the 2155 and the monthly chart of 2192.592 area, in order to continue higher to the upper extensions, the 23, the 38, and the 50, or the weekly ones, or do we fail the 38, 50, 61? That's a small cap. Let's take a look at the NASDAQ/NQ. We can see in the NQ, I have a similar situation. This is the annual high. We'll zoom in after that W pattern, and we can see that we had a weakness in it, and we recovered almost 100% of it. We looked above the 13,600, let's call it. Do we continue, or do we come back to the 38? We have the 18 simple moving average and the 50. We had a linear regression channel, which is this one no longer valid, which I need to re-anchor. We can remove this one. And this one needs to be readjusted. I'll keep that one. We can, connect these two dots here in order to have a better linear regression channel. I'll do this together here on this chart so people can understand how to draw an up channel or a down channel. We connect those 2 points. Does that mean that is it going to continue to the up channel here, and this one needs to be readjusted down here, remove drawing, and we can re-anchor this one from here to this one here, but this one doesn't look as more linear regression as the other one, so I'll escape it and I'll get this one from here and I'll connect it to this dot here, which gives me the breakout of that candle. And this has a linear regression channel going up, or we have a middle one. This was the last breakdown that we had down here. Do we continue up or not? That's the NASDAQ. Let's take a look at the YM, which is the Dow Joe. Then we'll go to the S&P. As we can see, after that W pattern and the annual high here, we continued higher by side action for a couple of weeks. We had almost a month of range bound in the Dow. We broke up, we fell back in. Do we continue or not? This is very important. This is the February fib. As you can see, this is the December Fibonacci on the monthly, so I have to re-anchor this one. So I'm going to remove that one. We'll use it as a reference, so we get a Fibonacci from here, and I will use that together. We get the Fibonacci, which is this one right here, from the January 4th, this is our low, to the high of the month. Is that the monthly? This is the monthly high. We connect it. As you can see, the low and high is here, and we rechange the anchoring of it, edit the property. And what we do, we go in here to make sure that those levels are 29,760, which is correct, and the high 188, and we change the coloring of them, select go to more, and I usually have on the monthly a purple color. I push OK and I apply it. So you get the monthly fib. The most important thing, we hold the annual high and the 38.2 fib in order to continue higher. If we fail on this double top, watch the breakdown of this channel to continue lower. And what I'll do, I'll go to the 4-hour 15 days so you can see the channel that we came out of the symmetrical triangle and broke out in the last day. If this is a double top considered and we cannot continue, we will look for the 38% fib as well as the monthly 38 and 50 to hold. If this does not hold, then we fall back in. So I'm not trying to be biased to either side. I'll do the ES here on the 15 as well. We do have the monthly fib, which is the high here. You can see it in January. And this is the weekly low from Sunday through Friday's high. As long as we stay above the monthly high of the 38.60 and the 38.2, we can continue higher. If we fall below this range of this move back up that we recovered, then we fall back into the other side of the scenario. And I can show you how the daily will look like. So we can see the annually where the high and low for the year was. This is the annual high at the 37, 53, 55 area. So this is the W formation. Then we eventually broke out. If I zoom in here, we can see that we are in a continuation, grinding higher. We broke out of this triangle, then we broke out of this one. Do we hold the 38 to continue higher or not? So don't be biased to one side. We're going to trade what we see. I will show you a couple of stocks and a couple of ETFs. We're going to go to the NYA, which is the New York Stock Exchange Composite, which gives us an overall view of the majority of the equities in the New York Stock Exchange. As you can see, we have, we eventually, after that W pattern, we continued higher. And all I've done is anchor here the annually on it and the monthly chart. I did not anchor the weekly because I don't need to, because I watch it as a reference for the overall market and conditions that we are in. We have to keep an eye on transportation, consumers, products, technology companies, healthcare sector. And this is why I use the NYA as a reference for you guys. So now we can go to such as AAPL. I'll do a couple of equities so you can see what's happening here. We have the annual high on Apple, which was around here, and we continued higher, but eventually last week's push up after the earning report fell back down. We're trying to push to the annual high, but the weekly fib is still weak. In order for Apple to continue, it has to clear the 38, 39 area to continue higher, or eventually fail and come back to the linear regression channel, lose the 18, come to the 50 SMA, and eventually the 50 fib. I like Apple in this area because there's a gap here, which is a green box ADX RSI crossing. I don't want to go into detail. I usually look for gaps in the chart where they are not revisited. In the future, they can be revisited. I'm not being bearish, but I'm giving you an opinion. Remember, Apple is trying to have its own vehicle. Does it succeed or not? Not sure, because Apple products are in Tesla. Okay, let's take a look at Amazon. Amazon was one of the stocks last week it reported. I did not like it. I liked Google more than ABC. And I kind of mentioned it in my video, but didn't say much in the group about it. As you can see, the push up, the spike down after the earning, and Google was only able to cover 50% of the move. Is still in the range. I mean, Amazon still range bound, has not been able to break up. If it loses this channel in the 18, I would look for the backside of this area, which is a green box up here from the last move up in Amazon. Let's take a look at, for example, Goldman Sachs. I did not do much on Goldman Sachs. You can see Goldman Sachs, after the report fell down, trying to recover. It's halfway back up. Does it continue or not? We're going to be open-minded to change in direction in the moves. That's Goldman Sachs, and you have to pay attention to inflation, as well as, interest rate bearing accounts such as the bond market. We can use the TLT this time instead of the ZB bond. This will give you an overall range that the bond market has been grinding lower. If the price of bonds going down, that means interest rates gonna start spiking up. Be careful of it, and we're gonna keep an eye on gold and other stuff. So that's the TLT. I want to go to GC, which is the gold. as we can see, we are in a linear regression channel, downtrending. We had one before earlier, which was in this range bound. We broke out of it. We looked up, tried to break up because that was the channel. Then it failed. And gold trying, a lot of people trying to get gold to go higher has not been able to succeed until we clear the 1880, 1900. We still in that range bound side action of this big move up. The reason behind that, I'm looking actually at this big gap down here. If this fills this area and the prior, the 1700 or the 1778, and it does hold 1778 to continue higher, that would be the annual Fib, which is right here, the 50, in order to continue up. But it has not been able to come here. It's been bouncing all the time between, the last couple of times, the 1800, going, trying to go back up, and it falls. And if this time it falls, I'm looking for the bottom side of the extension, which is the 61, and this will allow me, in the 50, allow me to look at this gap if it's going to hold it to continue back up. And I do have the monthly Fib on gold. I do not like it, and I will show the spike in SI, which is silver, or SLV. A lot of people talked about this in the, last couple of days. They saw, hey, we superheroes. They got the apex lift and the dump against them the following couple of days. Whoever chased this spike, that was the annual high from low to high. We reset at the high and we fell back into the range of the 26, 27, 28 cents. This is a very important area for silver to hold, the 26.27 or 26.30 cents, or the SLV, in order to continue higher. If it cannot recover the 38 or the 61.8 because it bounced off the 61.8 and cannot recover the 38% and the 28 area, the 28.10 to the 28.30, I think silver would be in play, but a lot of people don't like playing silver. So this is something to keep an eye on. Let's take a look at BTC, and I'll go to oil. That's Bitcoin. And I wanted to say something about Bitcoin. A lot of the cryptocurrency and Bitcoin and everything has been very well. We've recovered that double bottom, the 29,000 area. And we continued higher. The 32.6 was very important last week to hold in order to get to the 37,800. But if we do lose the 36,800 area, you have to be careful of it because it can create a W pattern, which is like a head and shoulder before continuing higher. A lot of people are very bullish on Bitcoin. But remember, these were the three professional gaps that we had on the weekly charts or the 4-hour that have never been retested, and I left these. I should keep them smaller boxes. I made them very large because I want to, what I'll do, I'll just keep that one here and I'll extend it, edit property. That way you guys can figure it out. And instead of the February, I'll just go to the March on it. We put 3. As long as this is a professional gap and has moved across, and Bitcoin is so far away from the 50 on the daily chart or the monthly, I would be careful of it because I'm going to show you something on the monthly chart or the weekly chart that you have to understand. We had that spike up from the 13,000. We started breaking out of this area at 8,000 and eventually the 13. Then we continued higher. These are the gaps in here. We are in a symmetrical triangle over here. But the most important thing, for Bitcoin to continue higher, it has to clear that 38% Fib in order to run higher. So don't be biased to one side. Because everybody says, let's pump it, let's pump it. I'm not that guy that does this kind of stuff. When I look more for technical setups and levels when you get in and get out, so you don't get caught and you make consistent revenue over the years. So that's Bitcoin. And if I go to the 15-minute, the 15-day 4-hour chart, we can see we created a V-shape or cup and handle. This is the bigger one. Is this going to create a cup and handle to break out of that 39,200 in order to continue higher, or does it lose this channel to come back to the backside of the 61.8. This is why you had 3 days range bound in here. Most importantly, we're going to trade what we see, and it is inside last week's push down. It came back trying to recover and reclaim that last dump from last week's Friday. So this is about Bitcoin. So don't be biased to either side. Trade the levels. So that's BTC. Let's go here to Google, the ABC, Google. I know I haven't forgotten about crude oil. I'll put it up. Crude, you can look at Exxon and other stuff. You can look at Google on the annual basis. It has, reclaimed that prior annual high since it did that range bound for a while. On the earning report, it has this nice professional gap, and Google looks much stronger as long as it can hold the 2050. You stay bullish Google if you have it from before. If it falls below it, look for the gap fill and a partial reset at the 38.2, then continue higher. That's Google. Let's take a look at Netflix, NFLX. Netflix, after the earning report, it fell back down inside the range. It's been going back and forth between, let's call it 575 and $485 range. So after this earning report, it fell back in trying to reclaim, but it only reclaimed 50% of the move back. If you take this distance from here to here, it reclaimed half of the distance. In order for Netflix to continue higher, it has to break that 38.2 range to continue back up for the annual high. If it falls through this channel, you're going to look for the 61, then you look for the 510, and eventually the 200 SMA to catch it. But if it breaks this area from here, from the Thursday candle, you look for the 23 and the annual high. So, and then you can continue higher. That's Netflix. Let's do last Tesla, and I'll do oil. Oops. He's Tesla. So as we can see in Tesla, this was the annual high from before. These were marks from before the split, before they split Tesla into, 5-to-1 shares, and it continued higher. I want to move to this area after the Tesla moved down and up. It's been range bound for a couple of weeks. I'm not liking this wedge in Tesla due to the fact, it's in a symmetrical triangle. In order to resolve itself up, it has to clear the 880 to run back up, or the 885. And if it falls back in, you have to look for the reversal of this channel back into the 750 area. We do have a small little gap in this area here, and I do have one down here. So I'm not biased. I have this screen and there's this big gap here. This is very important. When something gets too extended, if I'm going to look for it, I'm going to look for levels to retrace to come to in order to make a trade in it, or position yourself, in a spread, which is a wide spread between two ranges, to keep the difference on it. Because if you do verticals, or you do butterflies or broken wing or directional trades, sometimes it can be paid, and sometimes it doesn't. I try to look for a level before I end up being biased to one side. That's Tesla. Let's do crude, and we go back to ES and finalize, the charts, to close up the week. And I hope, this was very helpful. Oops, I put the ES. Let's do, we do ES back here. As we can see, the ES in here, once again, I will go over it in detail. In the last month or so, we pushed higher in January from low to high. Then we fell back in the range. Last week's range, we recovered the 3862.5. In order for ES to continue higher, we do not want to see the 38,062 reclaimed, or the 3833, because this is a very critical area. And the 24, if we end up losing it, then we fall back in the range. If we continue higher, we look for the extensions on the weekly charts to sustain it and continue to the 61.8 fib. I'm not being biased to being bullish or bearish. If we end up falling, you look for the 38%, 50, then the 61 in the channel to hold the support in the linear regression channel going up. So last but not least, let's go back to the charts I had over here. We'll go back on auto here, and here we go. Over here, I took the New York Stock Exchange, remember, using the 150-day moving average. A lot of people don't use it. I use a 116, a 50, and an 18 simple moving average. There's reasons behind it. But I wanted to show you from the 2000, 2001 Twin Tower, and after the Federal Reserve Board, because of inflation, interest rates, stimulus packages, those scenarios from the peaks and valleys, we recovered 100% in 2008, 2009, similar situation. Then we recovered those three peaks up here. And then 2020, the March of low, February, from March to February low, and we reclaimed it. And this is the same scenario in 2021 in January. Do we continue to be bullish or bearish after the vaccination, after the stimulus package, or are we heading in the wrong direction for the bull market? Then bear market will settle in, we end up range bound, or we fall further down. So I'm just trying to show you the scenarios. Don't be biased to either side. And I have the background in red because maybe we end up turning south. I'm not trying to say we can turn south, but I'm just saying trade the charts in front of you. Here's the risk from Wall Street Journal. It's not from me. They're talking about the stimulus since the 1984. And this is the reason why I went behind it. They've been printing money. And every time they printed more money, they rallied. Then we went side action for a while. It shows you, 21 years from 1962 to 1982, 84. Then we broke up. Then we had the similar situation from 1996 till 2016. Range bound, then we broke up. Does that mean the rate of change? Do we continue higher or not? There's only three scenarios that has happened in history. Was in 1984, happened in 2008, 2009, similar situation, 2010, and 2020, in January. So we have peaked three times. Does that mean we continue higher? And most people are not willing to be open-minded of the continuation to the upside or not. Last but not least, here's the drawdown that we can have in the next, let's say 1 month, 2 months, 3 months, all the way, to 200 to 9 months or a year down the line. These are how many days you can, have upside with a drawdown between 350 days to 179 days, which is half a year, which is the maximum drawdown of 9% or 14%. If we assume the upside, if we get a rate of return upside from where we are today in the S&P 500 and where we are sitting, can that 3,800 take us to the 4,087 average? Or do we go back from that 3,860 back down to the 3,500? So I'm not biased to either side. This is an assumption. We're going to trade what we see, and I hope this was helpful for you. I look forward to seeing you once again at Solstice ATR. And I will remind you, if you like this video, hit the smash button. Say thank you, and if you like to join us on Discord for 1 week for free, let us know. You can reach out to us by Solstice ATR, or you can DM me through Zuzu pound 9345 on Discord, or on Twitter at Chrissy Farah, one word all together with the letter I. So I will be able to add you on our group. Over and out.